All right, and we're live here on YouTube. We're testing out some new equipment at Tradesmart right now, and hopefully this is broadcasting in spectacular high-definition quality. Welcome to Crank Up the Cash. I'm so excited to be with you guys today. We're going to be talking about some thinking and some strategies for closing the gap between where you want to be and where you actually are. And August is a perfect time of year to be doing that. Many traders take a little pause here and they say, how have we done year to date? And what's the strategy to get from where we are to where we want to go by the end of the year? I'm going to target about 45 minutes here. So if you guys can settle in, we're going to cover some great stuff. If you're watching this on recording, not live, you can put me on 2x speed and get through it a little bit faster. Now, before we go much further, I do need to remind you that the training is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. Skipping to the end of that disclaimer, I want to make sure that any results that are shared should not be considered typical. They are accurate, they're truthful, but they're not necessarily typical, and I don't want you to think that a 45-minute YouTube video is going to replace some education and experience in your life. If you've actually, hold on, I got another slide. So my equipment's a little bit out of kilter here because we're testing some new things, but I think it's going to start flowing here pretty nicely. So today's outcomes in this session, I want to clarify the is versus ought, the situation as it is versus where it ought to be. Then I want to talk about using indicators to better find and forecast trades. We're going to talk about planning to thrive and the power of thinking time. This is one of the most spectacular exercises I had a mentor teach me years ago, and I'm going to share it with you. Then we're going to discuss some options trading strategies during recessions, and specifically when recessions are getting towards the end, and I'll share some data with you on that. And then we'll talk about making some next steps and moving towards your goal. If we've not had a chance to meet yet, real briefly, I'm Josh Hesse. Nice to meet you. I've trained over 300,000 traders at Tradesmart University over the last 13 years. That's starting to feel like a long time. The age range of people I've worked with go from kids. My own kiddos are stock traders. They love it. In fact, my middle child just got into and out of a Starbucks trade, put some cash in his jeans. And I've worked with people all the way up into their 80s. There really is no age restriction on when you can make money trading. I've worked with people that have $1.5 thousand accounts, and I've worked with people that have $1.5 million accounts. And the reason I bring this up is because I want you to feel encouraged that the world of stock trading is account size agnostic. The things that you do to be successful are not that much different when you're trading a gigantic account as opposed to when you're trading a starter account. So regardless of where you're at, there is room for you in the stock market. I also enjoy artificial intelligence. We've got a whole division at Tradesmart University that solely focuses on bringing AI, artificial intelligence, to retail traders. It's a pet project of mine. It's a passion of mine, because that technology has not been accessible to retail traders until recently. And then last but not least, I am the manager of the public TSU trading account at any time. If you want to see what our trading results are, if you want to see if we're eating our own cooking, you can let us know and we will share with you that public account. And we open it up from time to time in all of our group coaching sessions. Now, I want to reground here and just remember why we're doing all this. August is a great time to do this as well, to answer the big why. That's the popular thing to say. And the big why, or the ethos here at Tradesmart University, is that when good people have more money, they're able to do even more good things. I believe that with all my heart. You know, candidly speaking and kind-heartedly speaking, it's not poor people that build orphanages and hospitals. It's people that have resources. And so if we can better create resources to make you successful, we believe that you will then go out and do even more good things in this world. Here it is on a bumper sticker. Tradesmart University wants to help you create paydays on demand. It's one of the things I love about the stock market is any given time, there's equal opportunity out there for everybody to extract some cash out of the stock market and put it in their jeans. All right, now with that said, and it looks like we are streaming just fine here. Let me check my settings. Yes, we are. Let's talk about the is versus the ought, the situation as it is versus what it ought to be. And many of us jump into the new year with this idea in mind that, maybe last year we did $3,000 a month in cash flow out of the stock market, and we're going to increase that to $6,000 a month this year. And we get a idea in our mind that it might look something like this. I'm going to just through osmosis, I'm going to somehow go from where I was to where I want to be, and I don't really have any great idea of how I'm going to get there. And so oftentimes what it might look like is something more like this. We start off really strong, we make some changes, we watch the class, we do the thing, and we start off heading on up towards our goal. But by the end of Q2, which is what we just wrapped up here, we're kind of right back where we started. Now, some of you have been very disciplined, and your equity curve looks more like this, or your monthly revenue looks more like that, and that's fantastic. And so the question is, do we have a strategy? Is the horse that we're riding the right horse that's going to take us all the way through the end of the year? Now, you're not alone in all of this. Institutions all around, August is known for everybody kind of taking a little break from what they're doing and reanalyzing their progress, reanalyzing their performance. And so you're good company by taking a look at where you are, the situation as it is, versus where you ought to be. Now, before we get too much further down the road, I'd be remiss if I didn't say, do you know what your ought is? Do you even know the target that you're shooting at? Anybody can pull the trigger on a gun, but if you're flailing around wildly, you have no idea where the bullet's going to go. What are we even aiming at? So I ask you right now, and you can type this in the YouTube comments, whether you're here live or whether you're doing it in the recording. You type it in as a form of accountability. Like, this is what I'm shooting for. And so a couple questions to clarify this. Number one, how large is your trading payday each month? What is it that it ought to be? What are we targeting for? Are you wanting to make $100, $1,000, $5,000, $10,000 a month? We have some students at Tradesmart that are making well over $10,000 a month. How large is your purpose-driven payday every single month? And then number two, what size account is required to get there? Because it might be one of the best things that we need to do is go out and figure out how to supplement our account if we want to get to that goal faster. If you're wanting to make $5,000 a month and you're trading a $2,000 trading account, those dots are not going to line up. We may need to approach a little different strategy to get the account growth to where we need it to be so that we can extract that monthly $5,000 payday that we want to see. Now, this may seem encouraging. It may seem discouraging. And I want to just share a story that my mentor Keith once shared with me when we were talking about this idea of the is versus the ought, the situation as it is versus where it ought to be. And sometimes we look at that goal and we say, I want to make $10,000 a month, and it can seem like so far off in the distance that we never can actually really get there. And Keith shared with me this one time. He said, Josh, setting large goals that are off in the distance is much like kicking a can down the road. You see, if you were to walk up on a can, we'll imagine this is a country road here just south of Nashville, Tennessee, my hometown. And you were to think to yourself, I have a big, hairy, audacious goal that I'm going to kick this can a mile down the road. It's a great goal. The problem is if you wind up and try to kick that can a mile down the road in one fell swoop, the likelihood that it gets there is zero. We don't even have to take an over-under bet on that. I guarantee you cannot kick that can 1 mile with one kick. You could be in an NFL team, a kicker on an NFL team, and not be able to kick that can a mile down the street. But instead, what happens if we simply lined up behind that can, got an idea of where the destination was going to be, and we gave it a little kick? Maybe it goes directly towards the goal. Maybe it squirts off to the left or the right-hand side of the road. I don't know. But what I do know is if we line up, kind of get an idea of where our goal is, and get behind that can one more time, and we give it a kick, and we do that over and over and over again, after about 200 or 300 kicks, that can is going to be a mile down the road. And you'll look back and think to yourself, I just kick that can a mile down the road. So it is with your trading accounts, friends. 5,000, 10,000, 20,000, whatever the number is that you're wanting to extract from the market every single month. It may feel like that mile destination when you're standing there looking at the can, but if we can get an idea of where we're going, if we can get some strategies pulled together to wind up and kick that can, we don't have to make it a mile down the road. We've only got to make it the next 5 feet and the next 5 feet and repeat over and over and over again. Write this down. Ordinary things consistently done will yield extraordinary results. Ordinary things consistently done yield extraordinary results. As we think about how we're going to kick this can 5, 6, 7 feet every single time, I want to remind you or introduce you to the ultimate trading formula. If you've been around TSU any period of time, you've likely heard me or one of our other instructors talk about the ultimate trading formula. This is the way that we are able to train successful traders. It's really not a complicated process. There's simply 3 things that you need to do consistently so you can achieve an extraordinary result. The first thing that you need to be able to do is consistently predict the direction that a security is going to move. This is called forecasting, and it's a combination of methodical analysis, which is a skill, pattern interpretation, that's creative, and then some experience. And so one of the things that we might consider doing as we're winding up and getting ready to kick this can is we may say to ourselves, how might I better forecast the direction a security is going to move? That's a kick right down the road. The second thing in the ultimate trading formula that you need to be able to do consistently is apply the right strategy at the right time. And a winning strategy includes 3 parts. It should include identifying an opportunity in the market, strength versus weakness. It should have a cohesive set of specific and coordinated actions. And third, my third's not popping up. Oops, my third went away. You should always begin a trade with protection in mind. It's listed in the second bullet point there. So it includes coordinated actions, includes strength versus weakness and opportunity, coordinated actions, and protection against failed outcomes, which leads us to the third thing in the ultimate trading formula, relentless risk management. It's tempting, my friends, to focus on the opportunity. However, if you manage the risk, the profit will often take care of itself. Everybody gets twisted up about strategy, but it's really risk management that we can put a little extra green in our genes. Now, these are the 3 principles that we're looking at. And these are the 3 areas that we want to go and build some more muscle, build some more experience, be able to kick that can down the road. But simplistically saying, in order for things to get better, you've got to first do better. To do better in trading, you've got to get better. Something has to change. A muscle has to get built. Nothing can change until something has changed. And that's why we start off with the ultimate trading formula, because that's what we've got to get focused on improving. We've got to get better at predicting a direction. We've got to get better at applying the right strategy, and we've got to get better at managing risk. So I'm going to go through each of these in this particular session. We're going to start off with better forecasting. And one of the things I've been working on personally in terms of forecasting is using indicators to find and forecast trade direction. Find and forecast. Don't miss the first part of that, finding. In my opinion, that's one of the biggest strengths of mastering indicators, is the ability to identify stocks that are in certain scenarios, certain setups, so that you don't have to look through 7,000 stocks and ETFs to go and find the one. We'll talk more about that, but let's reground on what indicators are. Technical indicators, which are different than fundamental indicators, but technical indicators are the visualization of price, open, high, low, and close, and volume. With that information, price and volume, we can process this data in seemingly endless ways. And when we do that graphically, It reveals otherwise hidden characteristics of trends and pivot points. Now, there's a few do's and don'ts with indicators, and I never know in a public setting where everybody's coming from. We have those that use indicators overboard. I love you, but let's take a breather. And then we have some that have not had any experience with indicators. So for generalization, do use indicators to scan for trading opportunities. Use your indicator to identify a stock that's in a certain setup or position, for example, a bullish trend, or more recently, a bearish trend, and then identify the indicators that are going to reveal the stocks that are in that circumstance. The second thing, there it is. The second thing that you want to do is get clarity on the forecast. I often tell students that using indicators is like checking the engine temperature and fuel when you're driving to grandma's house, right? You don't get to grandma's house by staring at the fuel gauge. Some of you maybe have been staring at the fuel gauge more recently. You get to grandma's house by looking out the windshield, right? That's our core analysis as stock traders. But if you don't peek at the fuel gauge, if you don't look at the speedometer every now and then, you're going to have some interesting circumstances that occur on the way to grandma's house. And the same is true in trading. Of course, we want to look at candlesticks and chart patterns, support, resistance, all the hallmarks of great technical analysis. And you want to check your indicators to make sure this thing isn't running out of fuel. Now, a few ways that indicators get abused. Number one, people put tons of them on their chart, and by the time they get to the end, their chart is so squished, you can't even make heads or tails of what's going on. I oftentimes will get somebody that sends me an email, and they're like, Josh, everything looks sideways right now. Like, all these stocks are sideways. And what you realize is they've got like 8 indicators underneath their chart, and each one just keeps squishing the chart up higher and higher and higher until, ultimately everything does look sideways. So we work with them to, remove those indicators and split them up on different pages and whatnot. So don't clutter or squish your charts. You need to be able to see your charts in full fashion. Next, don't seek a perfect indicator. There's not one. The closest that we get is artificial intelligence. But outside of that, they all have their benefits and they all have their drawbacks. Also, don't abandon your core analysis tools and skill set. Indicators in my workflow as a stock trader are the last thing that I check. Now, there's 4 types of indicators. Broadly speaking, they can be divided into the following groups: indicators that show us trends, indicators that show us momentum, indicators that show us volatility, and indicators that show us volume. Now, pause here quickly. Those might be 4 things that you want to articulate in your ideal trade setups, because that's what the indicators are going to lead you to. So it might be that you want to find a stock that is in a bearish trend, but has had a recent pop up. Now it's near resistance and getting ready to come back down. Does that sound like a trade you might be interested in? The momentum is heading down. The stock has popped up, right? So you want to sell the rips in that case, buy the dips and sell the rips. So we want to sell the rip. How might you do that? Well, let's look at some moving averages to identify a trend. Let's look at a stochastic or momentum oscillator to see where the price action is in terms of its momentum, its cyclic momentum. And then we can start getting narrowed down the exact stocks that fit that criteria. Now, here's an example of using an indicator to make sure that you've not lost your mind. This is a picture of the S&P 500. And if you're here live, how many do we have here live? We've got 13 of you all here live. Scott Calhoun, good to see you. All right. If you're here live, you can type it in. If you're not here live, you can still type it in the chat pane. This is the S&P 500. We're trending on up. What do you think? Does this look like it's going to go up, or does it look like it's going to go on down? If you said that it's going to go up, I would not necessarily disagree with you. It looks like, from what you have on the chart, that this is going to go up. But if I reveal what actually happens here, it went down. In fact, the peak right there is actually January 2022. Y'all remember that back when we used to make all-time highs in the stock market every day? That's been a little minute ago. Right? It broke down. Well, what happened? Well, part of it is things started changing in the economy. Things started changing in the world of investment, right? But is there any kind of an indicator that would have given us an indication of the fact that this momentum was breaking down? And indeed there is. This is called a MACD indicator on the bottom. I'm not going to get into how it's designed, but I want you to see that while price action was making higher highs on the chart, MACD was making lower highs on the chart. Momentum was coming out of this. This, my friends, is called bearish divergence. Bearish divergence. It's a very good indication that the trend is getting ready to change. Now, bearish divergence on its own does not trigger us into a trade. It can take many cycles and iterations of the divergence to complete before the actual breakdown occurs. But it sure as heck would prevent us from jumping into a bullish trade. I had a real life example of this recently. In fact, you heard me mention at the beginning of class, my son Josiah got into a Starbucks trade. We were looking at this together. Here's Starbucks. Notice it's making lower lows and lower highs. It's in a downtrend. And check out MACD. It's making higher lows. This is the inverse of the last example. This is called bullish divergence. And I happen to see this in real time in a power trader session. If you're not familiar with power trader at Tradesmart, every weekend, one of the instructors takes some time and talks about what their strategy is for the week of trading ahead and looks at some trade ideas. And it happened to be my particular week to lead power trader. And I had Starbucks written down on my notepad because it fit the criteria for my searches. I was looking for a stock in a bearish trend and we were right up near resistance. And I was like, you know what? This is a great opportunity to sell short, right? Would you all agree looking at the chart right here? And what I do in Power Trader is I kind of get to that point and then I stop and I do my final analysis on recording. So the participants in Power Trader can see my thinking process and how I walk through that. And so we got to Starbucks and I was so excited for this trade. I thought it was going to be amazing. And then then the bullish divergence showed up. I said, y'all, this is not a good bearish trade. In fact, if this were to break out of that downward trend line, it might actually be a good bullish trade. And sure enough, just a few days later, Starbucks broke out. And if I had an updated screenshot in here, it really broke out. It gapped up a couple days ago and went. And Josiah, my 12-year-old, he heard that. He watched that. He doesn't have enough in his trading account to trade margin yet because he's self-funding it. That's how kids, learn to appreciate their money. And so he can only buy long. So he was excited to buy long on Starbucks when it broke out of that resistance. And he's doing very well on that trade. So that's an example of using an indicator to help warn you of troubled waters ahead. Now, the next thing, I'm going to skip to plans here, and we'll come back around to strategy at the end. But just in order of sequence, I want to start talking a little bit about taking some of this information and incorporating it into a strategy to get to where we want to be by the end of the year, because I don't want to confuse a picture of the destination with the roadmap to get there. I could show you a picture of grandma's house, but you would have no idea how it is that you want to get there. I showed you a picture of using MACD to better forecast if a trend was going to continue or break, but you don't necessarily have a great plan to get there yet. And so we talk in Tradesmart all the time, both as a team and also with our students, about the difference between good strategy and bad strategy. Now, if you want some extracurricular homework, there's a book out there by the same name, Good Strategy, Bad Strategy. The cover looks identical to this. Look it up on Amazon. It's black and white with the inverted lettering. That's why I made the slide this way. And they talk about the difference between good and bad strategies. Now, it's primarily a business book, but there's a lot of application to trading. Here's an example of a bad strategy. Josh, I'm going to make 25% next year. And I'd be like, good luck with that. How are you going to do that? Right? That's a hope, right? And hopes are not plans. A good strategy, on the other hand, sounds like this. I'm going to add 5R to my monthly trading results by number 1, acquiring well-placed shares using naked puts, and number 2, finally mastering Alfonso's freaking gap training. Alfonso is one of our instructors here at TSU. He makes so much freaking money trading gaps, and this is actually my personal strategy by the end of the year. In fact, I've asked Alfonso to come teach his gaps training at TSU so that I can learn it selfishly. So that's my strategy. I've got some cash sitting on the sideline. I'm going to acquire well-priced shares using naked puts and master that gap theory or gap strategy. Combined, I'm targeting an incremental increase of $2,200 cash in my jeans or green in my jeans every single month. That's my strategy from here through December. Now, a way that you can get to this strategy is through an exercise that I call thinking time. This applies to stock trading. This applies to business. This applies to your life. Thinking time is the most important muscle that I've built in my lifetime. By the way, if you've ever heard of the book Rich Dad, Poor Dad, the rich dad is a real human being. His name is Keith Cunningham. And the rich dad is the one who personally taught me this strategy on thinking time. Keith's a very, very, very dear mentor of mine. And this is his strategy for thinking. And so thinking always begins with preparation. You turn off the devices around you. I'm a fan of turning off everything, although today I do thinking time on an iPad. So that's the only one that stays on, but I put it in airplane mode so messages cannot come through to me. I have a thinking time chair. I have a thinking time pen. I even have a thinking time pose. It looks something like this. That's my thinking time pose. It's very ritualistic. And the reason that you do that is when you get those elements together, from the resources to the anatomy, right? The position that you're in, it's like it tells your brain, it's time to think. And in the beginning, it will feel a little cumbersome, but as you do it, it will become second nature. You don't even have to get worked up to go into thinking time. Your brain just says, it's time to think. So begin with preparations. Then you want to add to that a high quality question and a bullet point on your sheet of paper. High quality question and a bullet point. Now, high quality questions sound something like, how might I? An example of a bad question is, why can't I make any money trading? And I'm just realizing the fonts on this computer are a little different, so this could look very interesting. Why don't I make any money? Why do the trades always go against me? That's a terrible question. A better version of that question is, how might I be more consistent with my execution? Or how might I better design a strategy which has fewer whipsaws? Or how might I learn from some of the stocks or some of the trades that I got stopped out of? Maybe it's a position sizing problem that I have, and I'm setting my stop too close. Begin with a high quality question. I've got a half dozen of them or so coming up here in just a second that you can take screenshots of. All right. And so once you've got your high quality question and you got your bullet point, then you write your answer in there. And this answer is going to be crazy obvious. Like, Josh, the way that you can make $2,200 more a month is by going and robbing a bank, right? No, that's a bad example, right? You could just place more trades. Okay, we'll write it down. And the reason the answers are obvious in the beginning is because those are the ones that are top of mind. But always keep another bullet point, because there's always another answer. And what will happen is you're going to push through these obvious answers, and then you're going to get to a crazy answer. And that is where your brain says, I don't know. I've given you 3, 4, 10 ideas on how you can incrementally increase your monthly purpose-driven payday trading the stock market. I got nothing left for you. Why don't you just go rob a bank? And you're like, probably not advised, but I'll write it down. This is critically important, my friends, and it's the difference that makes the difference. Most people stop thinking time when they get to the crazy. But you've got to push through the crazy, whether it's 2 answers, whether it's 3 answers, whatever it is. You've got to push through the crazy. It usually takes 10 or 15 minutes. And you're like, these ideas are not remotely actionable. And then all of a sudden, a genius answer pops out. And you're like, wait a minute. Okay. I see what you did there. And then another genius answer pops out. And this, my friends, is where the gold is found. It's called the third by Keith. He says, if one of the first answers that came to your mind was the right answer to get you from where you are to where you ought to be, you would have already done it by now. And so the first answers are never the right answers. And you've got to get to that point where you're just going crazy, because that's letting your mind imagine. It's freeing it from the constraints of what it knows. And finally, you get to something that's genius. And then here's the most important step in fonts that are going to look wacky for you. That says action step 1, action step 2. You need to go back through the answers to your questions. Find the ones that are valuable, because most of them are not. Find the ones that are valuable. Find the ones that are actionable. And then schedule it. Now, sometimes I have exited a thinking time session, and the action step is, I need to spend a little bit more thinking time on this one right here. How might I better use gaps to get in and out of trades faster, recycle my cash quicker, and take advantage of the volatility without sacrificing my position sizing and risk management protocols? That's a good 45-minute session of thinking time. Sometimes there's 1 action step. Sometimes there's 4 action steps. There's usually not a lot more than 4, right? Because this is very targeted. And the next thing you need to do, schedule the meeting, read the book, practice the exercise, whatever it is. That's what you go and do next. Schedule your action steps. There you go. Now, here's some thinking time questions for you. You can take a screenshot or come back and pause the video here, write them down. Really high quality question. What's my vision of excellence and where am I dabbling? Are my goals wishful or hopeful thinking, or are they based on achievable benchmarks? What have my losses taught me? What are the most important lessons that I've learned? Or have I repeated the same mistake before? What have I been ignoring? A few more. What must I do differently? Some of y'all have stop written at the top of your page. I need to use stops. What rituals and or disciplines do I need to adopt to reinforce my trading outcomes? How have I created accountability? Y'all, I was a good trader before launching Tradesmart in 2009. I became an astoundingly amazing trader when we started doing Power Trader in 2009, because I had 500 people that were accountability partners. And trust me, they send me emails if I break my own rules. There's a lot of grace in our community. If you follow your plan, you follow your rules, and you lose some money. We all can understand that because we can go to work on the plan. That's something that's fixable. But if you're haphazard in your execution, you're going to be haphazard in your results, and it's going to lead to hazardous results in your trading account. Right? Create some accountability for yourself. If you're part of the TSU community, post in Discord. Post your trades in Discord. Daryl's the most prolific trade poster in Discord, and he's crushing it. Did y'all see him this week? It's amazing. Last 3 questions. Where am I inconsistent? What is my financial target? How frequently am I going to achieve it? Do I make $500 a day? Do I make $5,000 a month? What's my target? And how frequently do I need to achieve it? And what strategy or strategies will I use to achieve my target? This is one of about 100 questions that I've curated over the last decade of great trading thinking time questions. And we can make that PDF available as desired. But start off with a great question. You know, there's a saying out there, having the right answer is smart, having the right question is genius. Start off with a great question, and you're going to be much happier with your answers. All right, moving on here. We got about 10 minutes left before I'm at that 45-minute mark that I promised earlier. Let's talk about options strategies. And as we jump into option strategies, this is a screenshot of the S&P 500, of the Dow Jones Industrial Average. And I've highlighted on here with the gray box each time a recession occurred and the duration of it. Now, I'm not going to get into GDP recessions versus neighbor recessions, and we'll let the government sort all that out because they know best, right? But these are the neighbor recessions, NBER, which is what the White House is advocating is the true definition of a recession, and they're not wrong. We've used those calculations for about 70 years now. I think they came out in the 40s. Fun fact, though, only one time in history, has there been a GDP-defined recession and not been a NBER-defined recession, for whatever it's worth. But maybe it'll be the second time now. So here's the gray boxes, and what I want you to see is the reaction of the Dow in relationship to the end of the recessionary period. With one exception, the second one from the right, with one exception, or third one from the right, we got the little 2020 crash, the one in the middle. With only that exception, the market bounced about halfway through the recession, and each of these recessions were between 6 and 18 months. The 2008 recession, the big one in the middle there, that was an 18-month recession. All the rest were, I believe, definitely under 16 months, and I think most of them were around 12 months. Now, the reason I say that is if it turns out that we're in a recession, as GDP suggests, that started in January. That means we're 7 going on 8 months into that recession, which means we're kind of getting around that time where the market thinks about bottoming. Write this down. The market is always forward-looking. It's 6 months in the future. It's imagining what's the economy 6 months in the future, not right now. I bring that up because there's an opportunity, I think, to use some options wisely as we're approaching a market bottom. So here's 2 ways that you can do that. For larger accounts, you can use option selling strategies to acquire shares. That's the naked put that I was talking about a little bit ago. You can sell options to get put shares, and if you're wanting to hold them for a little bit longer period of time, that's a great way to buy shares on discount. You can then turn around and use option selling strategies to optimize share ownership. We have several students at Tradesmart that rock the covered call strategy, which is basically like renting your house out. You own the shares, you rent it out. It's kind of, right? They're called covered calls that you sell, and you're just basically giving people the right to buy your shares at a certain price if you want. But if that price isn't favorable to them and they can buy them cheaper on the open market, then you get to keep the shares and you collect their rent for that month. And if they do buy them, then you turn back around and replace your shares or sell a naked put, right? See how this starts to cannonball here? If what I'm talking about sounds like Swahili to you, never fear. We'll help you get caught up with options. But option strategies with larger accounts are very, very flexible and powerful. Now, if you have a smaller account, and I'm going to say between $7,500, $10,000, you could consider using option buying strategies to reduce your risk. I'm not a fan of all or nothing trades, but with options, it's quite likely that your exposure threshold in your risk management plan, that it would be possible the value of the option is cheap enough that even if you lost 100% of that trade, it still doesn't bust your exposure limits on your risk profile. It's an interesting idea. It's an interesting strategy for those that get a little addicted to I'm all or nothing. I can't, if you're struggling using a stop, you might consider using options to reduce that risk a little bit. Have you all enjoyed talking a little bit about how to put some extra green in your jeans? Just to recap here, we've talked about getting better at forecasting the direction a stock is going to go by using indicators and finding the trades that fit your trading strategy best using indicators. We also talked about winning strategies using option selling and buying strategies to get more cash out of the actual security that you're trading. And then to use option buying strategies straight up simply to leverage in a way that reduces your exposure on individual stock trades. And then lastly, we talked about your risk management profile and designing plans to get to where you want to go. The power of a trading plan is it's your North Star, right? It's what we're focused on. It's what we're doing. We can measure against our trading plan. We either did or did not follow our trading plan, and then as a result, we either did or did not make progress towards our goal. If this has been helpful to you, and if you would like to go deeper into all of this, I have some cool news for y'all. Now, if you're here live, you can participate in this live. If you're watching a recording in the future sometime, you can get recordings all of this. But starting next week, we are launching the very first Tradesmart University IPO. We're not going public. IPO stands for Indicators, Trading Plans, and Options. We are going to take a week in each of these subjects that we just covered in the last 45 minutes. We're going to take a week and go deeper. We're going to talk in depth about indicators. We're going to talk in depth about creating your trading plan, and we're going to talk in depth about options trading strategies. And I'm bringing in 2 other guest instructors along with myself to facilitate these. We've got the one, the only Alfonso Esposito, and Chris Burgess is going to be joining me as well. Now, just to reground, the big why for doing the IPO is to better help you create paydays on demand. You might even say purpose-driven paydays, because when good people have more money, they're able to go out and do even more good things. And what we've learned over the last 13 years of working with traders is that the most successful traders most need the ability to find and forecast trades. If you're constantly finding lousy stocks to trade, you're consequently going to have lousy results in your trading. Beginning with a finder's mentality that we want to find the very, very best trade and then apply world-class forecasting on top of it, that's where the beginning of success starts. Number 2, the ability to strategize for any market circumstance is of utmost importance, because strategy leads to monetization. We've got to first find the very best trades. We've got to strategize what we're going to do with those trades, and we've got to monetize that by managing our risk and putting cash in our jeans. So we've designed the IPO with you in mind. This is what it looks like. I'm going to start off next week with the Essentials Indicator Training. This is $497 value. You can buy the Indicators course at any given time on the TSU website. I don't recommend that right now because you're going to get it as a huge discount here in just a second. But the Essentials Indicator Training, that's what we're kicking things off with. Then Alfonso Esposito is going to be sharing with us his wisdom on trading plans. This is an education/workshop style feel. You go through, and at the end of this experience, you have your trading plan laid out before you. If you don't have a trading plan, this is invaluable. If you do have a trading plan, the opportunity here to up-level your trading plan is of utmost importance as well. And then Chris Burgess is going to be talking about cash flowing with options. This is sort of a boot camp style class. This is going to help you get up and running quickly with options if you're not already. He will be teaching some of those strategies like the covered call, the naked put, and I think he's even going to get into a little bit of some advanced strategies in there as well. So that's the 3 trainings: the indicators, the trading plans, and the cash flow with options training. And then we got a whole bunch of bonuses as well. The first bonus and the second bonus are an indicators setup lab. So I'm going to hop on live in a Zoom call And we're going to go ahead and get all of your indicators set up in your charting application. I'll show you all my settings. I'll show you how we use them. I'll show you how I scan for certain stocks given certain indicator conditions. Then we're going to talk about how to get your trading plan all pulled together and give you a guide that you literally just fill out, answer the questions and fill it out, and then boom, your trading plan's done. You should be able to hand your trading plan to your significant other in your life. And should you go to heaven prematurely, they should be able to execute or certainly get out of the trades that are currently placed in your trading account. That's how detailed your trading plan can be. If it's all just living up here, right, it's probably not really that well designed. And then lastly, and this one is mislabeled. I meant to go back and fix this. Chris Burgess is going to be setting up option scans with you. Right, so the option crash course is the training. Then he's going to be setting up option scans with you. And if you're on the Thinkorswim platform, he can actually just go ahead and share those scans directly with you. So the total value of the IPO experience is well over $2,500. We are going to make this a no-brainer and drop the price and split it up. So it's only 2 payments of $247. That's it. And furthermore, the payments are 30 days apart, so you can go through the entire training for $247, and this is my promise to you. It's on YouTube. It's here permanently. Record it. Send it back to me, right? That's our heart is, if you don't get at least 10 times this value, if you don't get $2,500 worth of value out of the first 3 weeks of the training, we'll give you a refund. I don't want your cash. We didn't earn it in that case. On the contrary, my hope is that you can take this information and put a multiple of your investment back in your trading account just by learning to find and forecast, apply the right money-making strategy, and up-level your trading plan. Here's the link to get started today. I will also put this in the comment section after we finish up the live here. But tradesmart.university/IPO-sign up. I guess it's not that hard to type in, but I'll put it there for you. And then for fun, for those of you guys that go ahead and get signed up today, the day of this recording here, we're also going to include an extra early bird bonus of a general admission ticket to the 3-day Ultimate Trading Summit. This is going to be between August 25th and 27th. It's 3 full days of training. The general admission ticket gets you in the door. It gets you in the Zoom call. It's going to be so much fun. We're going to have hundreds of people there, and we're going to have the mega Zoom wall of people, and it's going to be very interactive, very practical in terms of hands-on practical experience, and it'll be very strategic in the sense that you'll leave there with some really great ideas to go and implement into your personal trading account. The Ultimate Trading Summit. So just a quick recap. Again, you get the essential indicators training, you get the trading plans training, you get the cash flowing with options boot camp, you get the indicator setup lab, you've got the plug and play trading plan guide, and then with wacky fonts, you get the scanner for options. I want to leave you with these 4 thoughts here before we go. We're coming up just on an hour. Write these 4 words down and think on them after this session a little bit. If you want to really make progress towards where you ought to be, where you want to be, where financial freedom lays, the first thing that we've got to do is get serious. An ancient novelist once said, "It's the best of times, it's the worst of times." I have no doubt that people, even on this live stream, we got 49 people. People on this live stream have made 6 figures trading. For them, it's been the best of times. Some of y'all have just blown up your trading account, and you're on YouTube looking for a guru that's going to help you figure out what came off the rails. For those people, it's the worst of times. It's serious business. It's serious business whether you're winning or losing in this game of trading. It's serious business whether you're able to provide for your family in an abundant way or if you're struggling every month. It's serious business if you have a good future designed for yourself or if you do not. It's serious business. So my question is, are you serious? The opposite of serious is dabbling. Have you been dabbling in your trades? To transform your future, step 1 is get serious. Step 2 is get smart. That's what these trainings are for. Indicators, trading plans, options, right? The beginning of wealth starts with your knowledge. Of course, we wouldn't go and give a 6th grader the keys to the account. How long do you think the TSU trading account would last if that was the case? Maybe a highly educated 6th grader, right? But there's got to be some knowledge inside of our minds that we're able to take action on. Some say, well, Josh, no, really, all I need is the motivation to be successful. And I would say that's not true. Because if somebody's acting foolishly and you motivate them, all you've done is motivated a fool. They're going to get more foolish outcomes. I'm asking you right now, whether it's through the IPO or through some other training, if you want to change the trajectory of your success, you've got to dedicate yourself to new learning. Turn on the audiobook when you're getting ready in the morning. Turn on the audiobook when you're in the shower. Don't wish it was easier, my friends. Wish that you were better. Wish that you had the skills to succeed in the ground where you've been planted. Wishing that you had different soil all around you is foolish. Jim Rohn says it this way: it's the set of your sail that guides you to your destination. Don't like the direction you're going in, change the set of your sail. Don't like the ground you're planted in, right? Learn to get better, learn to adapt, learn to win in any situation. Step 1 is get serious. Step 2 is get smart. Step 3 is get going. You got to take action, my friends. Don't just leave this session and say, well, that was a good 45 minutes with that guy. No. You know, a great first step in taking action is a little exercise that I call cleaning up neglect. Have you all seen the YouTube of Admiral William McRaven? It's titled Make Your Bed. And he says, Navy SEALs, they're the best of the best. And they go through this training, and the first thing that they have to do every morning is make their bed to perfection. And you'd say, I would think that Navy SEALs have more important things to do than make their bed, but not true, according to Admiral McRaven. He says it's the most important thing they do. Because you set the sail for the day. You say, I am going to do the little things. I am going to do them to perfection. I am going to focus on accomplishments and succeeding. You know, there's a saying out there, the way that you do anything is the way that you do everything. Start off your day by making your bed so that you can build on that success. There's people out there, they say, I could use a stop. I should use a stop, but I don't use a stop. I could manage my risk. I should manage my risk, but I don't manage my risk. I could use the best strategies. I should use the best strategies, but I don't use the best strategies. I could watch the class. I should watch the class, but I haven't watched the class. My friends, the way you do anything is the way that you do everything. Make your bed. Take the next right step. So number 1 is get serious. Number 2 is get smart. Number 3 is get going. The number 4 is get better. Day by day, week by week, until you develop the skills that begin grabbing the attention of others. Here in Nashville, Tennessee, it's a well-known fact, I guess you could call it, or a well-known circumstance that it takes people about 7 years to become an overnight success in the music industry. And you're like, wow, where did they come from? They must have some kind of special DNA that makes them lucky. It was 7 years of blood, sweat, and tears, hard work, playing in every honky-tonk they could get calendared in. How do you think I got here? How do you think I'm trading the trading account sizes that I am? Or Alfonso, have you all seen Alfonso recently? The dude's got a $28,000 account that he's pulling $18,000 out of every month. Holy cow. He didn't get there because he quit the first time there was a bump in the road. Day by day, week by week, developing these skills that gets the attention of others. For things to get better, you've got to get better. For things to get better, you have to get better. Nothing can change until something changes. So use the stop, read the book, make the bed, get better. Here it is on a bumper sticker again with bad fonts. That's going to drive me nuts, but it's live. I can't change it. Come join me in the IPO, indicators, plans, and option strategies, the indicators training, the trading plans training and workshop, the cash flow with options boot camp. You get the indicator setup lab, the plug and play trading plan guide, and then the options scanners that are programmed with Chris. Thank you, my friends. I've enjoyed our time together. I'm going to just peek and see if there's any questions in YouTube. Good to see you, Scott. Hey, Daryl, you're in here. Did you hear? You must have heard your ears burning because I was talking about you. Thomas, good to see you. Mike, Fred, Ravi, Baba's Discount Store. That's cool. Awesome. All right, very good, y'all. Blessings, my friends. Have an incredible afternoon. If you have any questions, leave us a comment in the chat pane or email us info@tradesmartu.com. Otherwise, we're getting started next week with indicators. I look forward to seeing you guys there. Blessings. Have a great day, y'all. Take care.